You got Bernie Madoff, Sam Bankman-Fried, the Silicon Valley Bank closure. You've got all these cryptocurrency thefts. You've got Enron, Bre-X, WorldCom. Do you guys remember that one? For many of you, this is your first time here. My name is Peter Leeds, and along with my entire team, we publish the world-famous Stock Pick newsletter. So remember what Bre-X did is they took a sample from their gold assays and they sprinkled gold on the assay. So when they looked at it under the microscope, they said, wow, there's so much gold here. Some idiot sprinkling gold on the core sample. So when they look at it under the microscope, they think that they have so much gold. And then it just went wild and everybody and their grandma is throwing money at Bre-X. Enron was after that, $500 million lost. But not to be outdone, WorldCom came along with a $3.8 billion debacle. But then along came Bernie Madoff. Total losses estimated at $65 billion. And I want to say something about all of these different events, but we'll get to that when I wrap it up at the end here. Please understand that nothing in this video is intended as personalized trading advice for you. Trying to compete with Bernie Madoff was Sam Bankman-Fried, but he only got about a third of the way there. He cost investors about $26 billion. And he lost 94% of his wealth in a single day. And that completely reminds me of that video I made for you guys before about is the 1929 crash coming back. If you remember how that video started, gentleman gets on the cruise ship in Europe as a billionaire. And by the time the boat got to New York, he was penniless. And you're seeing how fast things can happen, just like with the Silicon Valley Bank. They collapsed in about 24 hours, out of nowhere. But I wouldn't say out of nowhere, but we'll get into that in a second. And I don't like getting into really crowded topics like this. That's why I haven't made a comment on it yet. The Silicon Valley Bank had basically a bank run. They're not using this conventional language, but that's what happened. It was a bank run followed by a bailout. Taxpayer dollars from the government to the bank. But they don't want to position it that way because it looks bad for them as politicians. And I know they're not taking the money directly. They're not announcing it as if it's like quantitative easing or something. But if you go down the rabbit hole far enough, you're going to realize that the money every time and always comes from taxpayers. That's where all the money comes from. So if they say, well, it's from a special account, that account was filled up by the efforts of taxpayers. It's being depleted. It's going to be refilled. Who's going to do that? Taxpayers. What happened was that Silicon Valley Bank had people taking out a lot of money, and so they had to cover that by selling bonds they had at a discount. They had to liquidate a bunch of bonds. They took about a $1.8 billion loss on that, while the shares of SVB dropped 70%, 70%. And because of this, a resulting effect was that the four biggest banks in America lost $52 billion in market valuation. So this one thing did have contagion effects, as I was worried that it would, and it spread out to a lot of other banks. A lot of the problem with the SVB bank was a lot of these customers were not regular people, they were corporations. So they had $10 million, $20 million with the bank. So they're covered for $250,000. And the rest of that money technically should be lost unless the government swoops in and says, we're going to take care of all of this. We'll cover the deposits. But that money has to come from somewhere. You see, they're indirectly doing a bailout. That's exactly what they're doing. It was a bank run followed by a bailout. And they're concerned. And you saw how aggressively they came out the next morning, 9 in the morning. Your money's safe. Don't worry, everybody calm down. And that's what they do before a big bank run across the entire nation. But they have to do that. They have to keep everybody calm. And that's how worried about this they were. That's also why they're overreacting so badly. As well, the index of the banks posted the biggest drop since the pandemic nearly 3 years ago. But there's a lot of other thefts too that you're not hearing about on the media quite as much. Specifically the cryptocurrency thefts. Listen to this. In 2021, the full year last year, cryptocurrency thefts resulted in $14 billion of lost money. So let's top that. 2022, the next year, full year, that was another record where cryptocurrency thefts resulted in the loss of $20.6 billion. Another record, and maybe 2023 we'll get another record after that. That's according to Chain Analysis. But the point is, with all of these things, Enron, Madoff, Sam Bankman-Fried, cryptocurrency thefts, there isn't fault to be blamed or pointed to the investor. You could have been sitting there and your friend says to you, yeah, I'm investing with this Madoff guy. Look at how much money he's making me. And you're trying to figure out where to invest. You say, okay, maybe I'll put some money with him. And the next thing you know, you lose your money. Or you invest in a cryptocurrency and all of a sudden your money's gone. And there's not much you can do about it. Or you put your money in the Silicon Valley Bank and you just all of a sudden are at risk of losing a bunch of it. Unless the government swoops in and takes taxpayer money to cover everybody's concerns. All of this is just more spending, more monetary creation. This is all going to lead up to a bad end. This American dollar is going to one destination, and it's only a matter of time until it gets there. When does it get there? Tomorrow? 5 years from now? 1,000 years from now? It doesn't matter. We're on the approach to the cliff's edge. We eventually get to the cliff's edge. But I would go so far as to say that the structure, the system we are in, is way too risky and vulnerable. That's why I like to invest in things that are highly proven. Nothing's more proven than gold. It was actually around since before capitalism. It fostered capitalism. It's still here. It's still increasing in price. It went up $50 an ounce yesterday. A lot of my gold mining stocks went up 6-7% each in a day. But then I want to go a step further and break it apart from all of these things that you couldn't have technically really avoided too well, even if you did some degree of due diligence. It's just an unfair system, really. It wasn't like you lost your money in Silicon Valley Bank because you didn't do your due diligence. But I want to add to all of these things, there's also the issues that we're facing that are man-made and completely unnecessary. So they're a bit different than the scams and the frauds and the thefts. Things like inflation. And then they raise interest rates to deal with the problem that they caused, which makes your payments and your servicing costs on the debts you do have much greater. Whether it's a auto loan, a mortgage, or just a line of credit, whatever it is. And in fact, this entire debt bomb itself, the debt bomb I keep talking about for years now, all the jobs we're about to lose, also unnecessary. And I talked about this a lot in my two-part video series that I just recently released.
Prices don't go down, they just don't go up as fast. Deflation is when prices actually go down. You're trying to achieve disinflation, are you not?
Yes, we are.
Okay.
And also in this part here.
How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right.
And now the recession, which is rolling through town, which is the point of my rolling recession video I just put out. It's here in different parts at different times. Just like the inflation went through cryptocurrencies, houses, stock prices. The recession is now rolling through the economy one part at a time. It's going to take out cryptocurrencies. It's going to take out real estate values. This is a matter of time. And I've been telling you this for quite some time. So you've got all of these, I'll call them unavoidable, although they're avoidable, but we'll call them unavoidable things like Bernie Madoff. I don't think it's realistic. There's an argument in law that's called reasonability. It's not realistic to think that you would have done enough due diligence to figure out that Bernie Madoff was a scam, or that you shouldn't have put money into Silicon Valley Bank. It's not realistic. So I don't put any fault on the people who are getting hurt by this, but then I'm saying that you add to this all the stuff that's unnecessary and man-made, such as the increased inflation rates, and then this is all underneath this backdrop of the potential for World War III. And when I say that, I don't mean that we're going to have a big nuclear war and we're going to have to live like cockroaches. That's one extreme. The other extreme is that there's no war at all. But I do believe it'll be somewhere in between those two extremes. And I do believe that, well, I don't see how we get out of this problem without a few punches being thrown. Eventually, someone is going to assassinate the modern day equivalent of the Archduke Ferdinand, and then we're into World War III. And whatever that brings to all of us, and none of us can know, we're all speculating, but there is a lot of other peripheral issues that I'd be concerned about. Even if the war kind of breaks out and then backs away a little bit and everything gets calm again, depending how extreme the war gets, it wouldn't be hard. And there's multiple countries who could do this right now. Completely take out all of our internet ability easily. You cannot defend an underwater internet cable. You cannot defend a satellite. Right here, I want you to see this video, Economic Crazy Town, because it's talking about exactly all these ridiculous decisions that the government is making. It's affecting you directly, and it's affecting the economy that you're living in. Along with my entire team, we publish the world-famous Stock Pick newsletter.